In this video, I'm going to show you guys the top 5 stocks that you need to add to your portfolio right now. And considering tariff talks are easing up and getting better, data's been good and earnings have been good, this is the time and the time of a lifetime to get in at cheap prices on certain stocks. So we're going to look at 5 stocks that I highly recommend for you to add to your portfolio. I'm going to explain why. We're going to analyze the stocks. I'm going to show you guys entries and exit. You don't want to miss it, so don't skip any part of this video. I'm going to explain everything and why I'm doing it. But first, huge announcement. Tomorrow, Friday, May 9th, my free masterclass webinar, 6 p.m. Eastern, 3 p.m. Pacific. You don't want to miss it. I will be teaching exclusive strategies that I teach my elite coaching and Discord for the first time ever in this webinar, showing you how you can make money in a bear market or a bull market or even a market like we have right now. And you can see on the screen, I made over $20,000 on Microsoft. I made money on Walmart, American Airlines. We also made money on NVIDIA. There are certain indicators and dark pool data which will show you where a stock or the market is likely to go. And I want to teach you guys these things tomorrow, so don't miss it. Links in the information box below. I'll be hosting a Q&A to answer your questions, and I have a huge announcement, so you don't want to miss this webinar. I will see you tomorrow. Starting things off at number 5, the number 5 stock that you need to add to your portfolio is Grab Holdings. This company has had very good growth, robust company that you need to add to your portfolio. Let me show you the data. Let's go over Grab and explain why this is a good stock to add. So looking at Grab, we go to the 4-hour chart. You can see that it has held its ground pretty strong even when the market went down. It spent most of its time above $4.33. They just crushed earnings yet again on the previous earnings of February 20th. And looking to April 30th, they crushed yet again. They have crushed every single earnings except for August of 24. You could see how up Grab really is over the past 3 earnings. But let's gauge their price to earnings. So they have a market cap of 20.15. We divide that by almost 3 in revenue, giving them a price to sales of 7, which is pretty good considering Apple's is 11 and Microsoft's is closer to 20 and Tesla's is over 25. Anything under 10 is great. Anything under 5 is stellar. They're great, but they're under 10. So it's a very good price to sales. Revenue is good. Profit is good. Operating income is in the negative on the trailing 12 month, but it's positive recently, showing a turn and a change of events for the positive side of things. Pre-tax income is also good. Net income, also good. They're profitable. EBITDA is looking good as well. We go up here to the balance sheet. We can see total assets cover liabilities and their total debt and net debt. We look at their net debt at negative $5.5 billion. Anytime you have a negative net number, it means you have none of it, meaning the exact opposite. If you have negative net debt, that means you have no debt, which means $5.5 billion in cash. This is very strong. Strong cash, profitability, growth, all great things. Free cash flow, $1 billion on the trailing 12-month. Cash flow is good. Operation activities is good. Profits are good. Balance sheet is good. It's a great stock to add to your portfolio. Even at the current price, I would look to just buy shares and enter right away. The number 4 stock to add to your portfolio is none other than New Holdings. We've talked about New Holdings before. They sympathize with SoFi. They're basically the Brazilian version of SoFi. Cut, short, narrow, and dry. But they are a very big competitor to SoFi. And not only that, profitable and a very strong company. And Warren Buffett holds quite a few shares of New Holdings, which, need I say more? If Warren Buffett's investing in them, even in the down market, that should tell you how strong New Holdings are. I have 3,000 shares of New Holdings. I plan on adding more. Very good stock. And I would not wait on adding this, especially with earnings coming up. You'd want to get in before earnings. And if it dips, you dollar cost average and add to your position. Looking at New Holdings, we go on the 4-hour chart. Again, another stock that has held its own in the downturn, still in its average or AVP, average weighted price, which is a part of what I teach my elite students, which I'll be teaching what AVP is in the webinar tomorrow, May 9th, Friday, May 9th, 6 p.m. Eastern, 3 p.m. Pacific. Be sure to register for that webinar. Links in the information box below. Very limited spots. I will be teaching my proprietary exclusive training from Discord for the first time ever in this webinar. You don't want to miss it. I'm going to show you guys how we make money, how I've made $30,000 just in the last 4 weeks in this weird, volatile market. And I'm going to show you how to do that. Looking at New Holdings, they are up. They've got earnings, which is happening next Tuesday. They missed last earnings. They beat the 2 before it. This earnings, they're likely to beat yet again based on analytics and data I have looked at. When we look at their price to earnings, we can see that it's 30, which is good. Anything below 30 or at 30 is average. So it's not bad. They're really looking for somewhere in the 15 to 25 range, but 30 is good, considering most other stocks that we've looked at in the past are 1,000 or 500, like Palantir and like other stocks, including Grab Holdings. But if we wanted to look at price to sales, we could look at their market cap, which is $63 billion. And we'll divide this by their trailing 12-month income, which is 10. So we're going to divide 62 billion by 10, which is a price to sales of 6. So not only are they looking at a solid 30 price to earnings, they have a 6 price to sales, and the average is 10 to 20. So there's a 2 to 3x return on new holdings potential in the next 2 to 3 years, where new holdings could actually reach a price of $25 to $36. Look at Bank of America. SoFi went to 18. SoFi and new holdings are the two best, in my opinion. And for this top 5 to buy stocks, new holding takes the position from SoFi just because of this right here. Growth, and because Warren Buffett holds it, and solid cash flow, solid numbers we're going to go over right now. Total revenue, $10 billion. Pre-tax income, $2 billion. Net income, $1.97 billion, $500 million a quarter. EBITDA, solid, okay? Balance sheet, total assets cover liabilities. Net debt, negative 9.19. They have $10 billion in cash. $10 billion in cash. This is one of the most solid stocks. In fact, I am almost, not quite, convinced to put new holdings in third or even second place in this video. One of the best stocks you can add. Warren Buffett holds it for a reason. Very strong stock. Cash flow. Cannot have a good stock without good cash flow. Good stock means good cash flow, and cash from operation activities, $11 billion a year, trailing 12-month. Cash from financing activities, almost $1 billion. However, their free cash flow has not been reported on here. I don't know why, but they're averaging $3 billion a quarter, $2 billion a quarter. It's not here right now. It was here recently, but I can tell you it is strong. New holdings is a great investment to add to your portfolio. The number 3 stock to add to your portfolio, and we've talked about this stock before, is Walmart. See, if Tariff Talk doesn't go the way we want it to go, Walmart is more likely to prosper than Amazon and be less affected. If the Tariff Talk goes well, then everything's going to do well, including Walmart. So Walmart beats Amazon. They beat it in the top 5 list 6 months ago, and they beat Amazon out of a position in this list yet again. Walmart will always beat Amazon because they deliver like Amazon, and they're local, and you can walk into the store and they're physical. They're old money. They've been around a long time, and they don't rely completely on China, which Amazon mostly does. So Walmart, again, makes the list. This is a great long-term stock. It's the equivalent of Coke, Verizon, Bank of America, Ford. It's a very safe stock. It's got some volatility to it, but it's very, very safe comparison to other stocks. Let's take a look at Walmart on the charts. So here you can see Walmart on the 4-hour chart, and it's resisted a lot of the downtrend. It's almost made it completely back. Walmart is a great stock to own long-term. I'd be selling $92 puts going 3 weeks out or buying shares. But remember the 33-10 rule. I've explained it before. You want to be more than 10%. You want to be able to dollar cost average. So add some shares now. If it dips in earnings, add more shares. Short-term, erase from your memory. Forget it. You want to think long-term. Add Walmart. Long-term, Walmart is a top 5 stock all day long. Let's take a look at their price to earnings, which is going to be great. It's at 40. Well, actually, it's not great. It's average. 30 to 40 is average. 30 to 50 is average. Anything below 30 is good. So it's kind of average there. We look at price to sales. We look at $790 billion, almost a trillion market cap. 790, and we want to divide that by the trailing 12 months. So 790 divided by 680. You get a 1 price to sales, which means Walmart could really 9x in the next 3 to 5 years or more. Based on trailing 12-month revenue going into their market cap, you very well could see Walmart at least 2 or 3x in the next 3 years, at least. As you can see, that these previous stocks I talked about are 6s and 7s. Even if it went to 6 or 7, which is less than Apple, which is where SoFi was, which is already stellar, that's like a 6x return on Walmart. Walmart essentially could go to $300 to $600 in the next 2 to 3 years, maybe sooner, especially with the tariff talk. Looking at Walmart, trailing 12-month is good. Revenue quarter per quarter is good. Operating income is very high, $30 billion. Trailing 12-month pre-tax, $26 billion. Net income is good as well. And when we look at EBITDA, very, very strong. Balance sheet, assets cover liabilities. Net debt, $51 billion. That is okay because even if you add their debt to liabilities, their assets cover, they're still in good shape. Cash flow, most important is free cash flow, $12 billion. trailing 12 month, $6 billion in the most recent quarter, which is still down from the expectations. However, Walmart is definitely a stock that is poised to grow in either situation going forward. Year to date, 9%, 1 year, 62%. Walmart, I told you guys last year, is better than Amazon, and it's went up 62%, which is a lot more than Amazon. This is ultimately a great stock. The number 2 stock pick for May of 2025 is none other than Google. Google is a great stock. They rushed earnings, ran, and then got annihilated on the negative news from Apple saying that search queries are down and they utilize Google as their search engine. Well, this is not really a big problem, even though they said AI is taking over demand, like Meta's AI. And we have to look at the fact that Google has Gemini, which is, in my opinion, the best AI out there. And we already know this. And Google doesn't get all of its revenue from search engines. Google also has Willow, which is the best quantum computing that you can get right now. I think they're going to be a leader in quantum computing. And not only that, their AI is great. They also involved in making phones. They also have YouTube, and they have their search engine, and they have their own AI that runs their search engine. So this is not something that I would allow to dictate the pace. The reason why the stock dipped is because it's a trader's market right now, and heavy, big institutions and retail are not involved. So day traders are just basically buying and selling dips, shorting and trading daily, which is why it's called a trader's market. So when that news came out, traders sold short and got out of positions. And there was no institutions there to buy up or to sell, so to speak. So nothing really happened except a big slip, which is normal. And whatever institutions were in Google, some of them probably sold as well. But in my opinion, nowhere near a selling opportunity. Google right now is even more of a buying opportunity than it was on earnings. And understanding institutions and a trader's market, what's going on right now, is a part of my webinar tomorrow. So you don't want to miss that. 6 p.m. Eastern time, 3 p.m. Pacific, Friday, May 9th, tomorrow. Link to register below. You do not want to miss it. Huge announcement. I'll have a Q&A as well. I'll be teaching you guys how to understand all of this. So looking at Google over the last several months, there's quite a bit of strength in Google as recently as right before earnings, and then it dipped, and now it's on its way up. And you can see we are in a mini uptrend right there. And my Fibonacci right here shows me a double fib strategy, which I'll be going over in the webinar as well. This double fib really illustrates what's likely to happen. I knew this was all happening right here when we broke the bottom of the double fib. I knew something drastic was going to happen, which is why my students and I had a pretty good heads up on this right here when it dipped. We knew with the double fib being broken what was likely to happen. So we're in an uptrend right now, a short-term uptrend in a long-term downtrend, which is divergence. It could go up or down, and if tariff news is good, it's the perfect opportunity to get in, because if you get in, then this is what's likely to happen. So you don't want to miss out on that. Market cap, it is 1.88 trillion. Price to earnings, 18, stellar. We don't really need to look at price to sales, but we'll do it anyway. 1.88 trillion divided by trailing 12 months, and we do this 359. So this is like 4.5 price to sales. So essentially Google could 2 to 3x. Based on Apple's price to sales, there's at least a 2 to 3x on the table. So Google could go to 300 or 400 in the next 5 years, which is why it's in the top 5 again. And I talk about Google a lot. The only reason why Google beat Microsoft out today is Microsoft has already run. It was in my last top 5 video. I got in January. I got out last week, and I made $20,000 on Leap options, and I made $10,000 on shares, $30,000 over 3 months to do absolutely nothing. One of those positions is right there so you guys can see it. I'll be teaching all of this in the webinar tomorrow. You don't want to miss it. Total revenue, $360 billion, trailing 12 month, $90 billion a quarter. When we look at gross profits, they're good at $210 billion, operating income $117, pre-tax $133, net income $111 billion. EBITDA is also very strong. Looking at the balance sheet, we can see they have enough assets to cover liabilities quite easily. Net debt, negative $66 billion, almost $67. $67 billion in cash. This lawsuit is no trouble for Google. They have enough cash to handle themselves and enough assets. Google free cash flow, $74 billion in cash flow for Google, and operation activities, $132 billion. You can see over the quarter. The most recent one, $19 billion in free cash flow, $36 billion in cash from operation activities. Very, very strong. Google is a great play, and at the current price, it's a no-brainer. I would add this all day long at the current price. This is the first time I've ever done this, but the number one stock to add to your portfolio right now is none other than SPY. SPY clearly is the best opportunity right now with a price target by the end of the year of 600 and 650 by next summer or higher At a price of $550 or $570, it's a no-brainer. ETFs are safer. The SPY can rebalance, and it does rebalance. So any stocks that keep going down that bring it down get ejected and new ones get added. So long-term, 6 months to a year, 2 years, a no-brainer. SPY is the safest and best bet, especially for a market right now. Let's take a look at the SPY, and I'll explain to you guys why it's so strong. When we look at the 4-hour chart on the SPY, you can see how strong it truly is. Broke out of the downtrend yet again, and this is no longer really a downtrend. This is now an uptrend. If SPY can break 580, we are completely out. It's struggling to break step number 1 at 570, but it's still a great buy long term because you can see even if it fizzles out over here and starts to go back up, let's show you what the daily chart looks like over the past 10 years. Just going back to 2020 in 4 years, there's been a 2x return. So the SPY is the best bet. It's the safest bet. It's an index that encompasses many different stocks. 1 year, 10%, 3 years is 40%, and 5 years is double your money at 100%, almost like 96%. The SPY basically has some top stocks that control it the most right now. Apple, Microsoft, Meta, Google, and Amazon. These are your big holdings. Every time Apple moves, it'll move the SPY. But the SPY ultimately is the best way to invest right now because it's the safest. And you can sell daily, 0 DTE covered calls and puts. This is honestly the stock you want to add because in my opinion, by June, July, or August, somewhere this summer, depending on tariff talks, I have a price target on SPY of 620, so that gives you a $50 price gain on every 100 shares. So my price target on SPY is 600 to 620 by end of summer, giving you $50 a share profit. This is a big one. This is the one that costs the most, but it's got the biggest potential move in the shortest amount of time. Walmart, Google, SPY are going to have the biggest moves. Google more than Walmart, in my opinion, and SPY more than both of them combined because of how big it is. It's more expensive, but more profits and safer. And since it has all these different stocks that encompass it, it's going to be dependent on the earnings of these stocks. Meta crushed, Microsoft crushed, and Apple beats. And when you have this situation going on, the SPY is strong. It's also the sentiment and the gauging indicator of the market. So the SPY is where I would put my number one pick right now. And specifically at the price that it is, I would definitely want to add SPY because you can see how much upside there is to 613. Don't you want to ride this up to 613? Even if it takes a year or two, there's profits here, but I don't think that's going to be the case. I'm really bullish. Tariff talks are going well. Interest rates are looking to get cut. This is where I would want to put my money into the SPY, especially long term. We've also triggered a ZBT, which is a Zweig Brett thrust, which was the biggest in history right now. And that is where the market's turning around. Widespread selling to widespread buying, and the SPY will benefit amongst all the stocks that go up. So this is your one size fits all. You don't want to buy into the other stocks I told you about. You just buy SPY and you roll with it. It's an ETF. It encompasses everything. It is the safe play, and it will go up, and you will make good money on this stock. If the market goes up, it will go up a lot. And I have a high price target on it. I'm very bullish for the rest of the year. And all of the bearish options expired in April, and everything turned around in May, just like I said, based on my dark pool data and analysis, which I'll be teaching at my live free webinar tomorrow, Friday, May 9th, 6 p.m. Eastern, 3 p.m. Pacific. Links in the information box below. You guys do not want to miss this webinar. I'll be teaching exclusive strategies on how to hedge your portfolio, make money in a volatile market. For the first time ever, I'm teaching what I teach my elite students tomorrow. You don't want to miss it. I'll have a Q&A and a huge announcement. I will see you guys tomorrow on the webinar. Like I said, links in the information box below. I will catch all of you guys on the next video. Take care of yourselves, fam.